morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Thursday, October 18th. Another up day, small, but nonetheless, you put in the books as a plus. We had a green day throughout all the markets, Dow, S&P, and NASDAQ. Very surprising that the markets actually shook off the bad earnings from IBM. We've had some bad earnings come out, some of the banks, and still the markets are moving up higher. I'm labeling this small rally here, this three-day rally, as a short covering rally. I'd like to see a lot of other indices and indicators following suit. They're starting to change on a positive note, but nonetheless, we don't want to just dive in here with two hands. Now, for the longer term investors, obviously stay put, stay status quo where you are until this market really gives you a decision to make as far as reducing some of your holdings or putting some protection on. Right now, that's not the case. Markets are totally complacent. Again, red flag for me. But intraday, we can be bouncing around buy side, sell side, and we have that little bit of luxury. Yesterday was a very, very quiet day, not a lot happening, but the markets did manage to get some gains, and I'll run through the numbers. Dow Jones up 5, S&P up just about 6 points, and NASDAQ up 295, and Dow up only 5 because of IBM. And again, amazing that the markets continued just to discount bad news. Good news is good news. Bad news is good news, if you can understand that. All right, so moving on, we had China come out with some numbers. We had China's economy expanded 7.4% in the third quarter from last year, 7th consecutive slowing annual growth. That's the lowest print since 2001. But a lot of the numbers were in line. Markets really didn't care. Again, we're basically flat right now in the pre-market. It's about 5 o'clock right now, 5:15. So markets are just discounting everything. Shanghai had a good day at overnight session, up 26. Nikkei up at 176, and the Hang Seng up 102. So we're doing okay. FTSE right now up about 12. And the Euro Stock 50 is down 0.3%, 0.3%. So really not much going on, really quiet right now. I think market's going to be looking for initial jobless claims at 8:30 today. So let's run into the charts here. Again, nothing really has changed, but I do like the fact that that we have extended gains, and we are extended, guys. There's no two ways about it. I wouldn't be looking to put on any long positions. Even last week, I wouldn't be looking at putting long positions. That's just not me right now. I think risk-reward doesn't weigh with me holding a position, whether it be long and or short. Market is not telling us to be short at the moment. And even last week when we got that small little pullback, there was no volume on the pullback, so that was a bullish. The pullback was definitely labeled bullish, so we wanted to make sure that if we do break some key support levels, then we would look to get short on any rallies. That did not occur, so we are now flat. We are not looking to trade and hold positions in the overnight until something like that would happen. Okay, on with the charts. NYMO McClellan Oscillator got a little bit of movement in the last 3 days, as you can see. We're up 20 here. Anything above this line here, 60 and or really like to see a big spike up, 80s, 90s, 100, would really give you an extreme overbought reading. Again, that has not occurred, so that means that we can move higher. Overbought is not a sell signal, as well as oversold is not a sell signal. Just please keep that in mind. Now, copper did pretty well yesterday, and I like the fact that I like seeing a lot of these leading indicators, if you will, copper. Want to see a lot of the high-flying tech sector starting to really take shape and money coming back into it. Really, we did get money flow back in, but that's just really right now an oversold bounce, and I'll get into that as well. But copper had a really nice day yesterday. Really, I want to see 385. I want to take out this high and then really take out this 395 and kind of chop around, create a new base up at these levels where this would be support, now resistance, and then really start to take off. And I think you'd have a really, really good Santa Claus rally. But I'd like to see a pullback in the market first. That might not happen, but I'd like to see a pullback in the market. Now, the only thing here, what might be a little concerning, is that the dollar's coming into some good support here. And if you see this dollar coming in here, we see the U.S. dollar starting now. We had that bear flag. We were consolidating for about a week and a half, and now we sold down to the 79 area. Well, 78.50, 79-ish is going to be a big support zone. And if you look at from here to here, don't just look at these bottom tails here. So you got a good 50-cent range. We're in support now. So any day, this market, the dollar can actually reverse and really start to move to the upside. So we want to just pay attention to what the dollar is doing moving forward. I'd like to see a pullback, a 2-3% pullback, 4% pullback in the market, even, believe it or not, a little bit lower if I could, before we start really picking up some seasonal sectors that are going to give us strength into the end of the year. All right, FXE, FTSE, I keep calling it FXE, the Euro ETF, big gap up, another big gap up. You can see this, it's exhausting. We have a doji, we have a long-legged doji, we have a doji here, and we are exhausted. We're getting exhausted, but we're not really overbought in our indicators, as you can see. But price is showing me that, we gap up. You can't gap up and gap up without at least a retracement back. So we're outside of our Bollinger Bands. Just a word of caution here with the euro extended, dollar at support, looking for a little bit of a pullback. Now, with options expiration, that might not happen. The market just could stay where it is for the next 2 days, and then we can get some movement to the downside sometime next week. But I am looking for some sort of a pullback here. Again, might not happen, but I am looking for some sort of a pullback. S&P cash coming right up into this resistance area here. As you can see, 3 big up days. And we are not overbought at all in our indicators, as you can see here in the stochastics. But price is showing us 3 big up days, a little bit of a pullback, maybe even back down to the 20-day. I would like to see, and then another rally and take out the highs. Fine, but 3 days up, you want to look, not really looking to buy stocks here, but held the 50-day nicely, as you can see, and this trend line, this red trend line I have that I have printed out for the last couple of weeks. Spiders, big move up in the spiders. Another big move up yesterday at the end of the upper end of the Bollinger Band. Again, but look at the volume. And let me just get this out because might not be able to see that. But volume really not there. Really not kind of confirming this 3-day move. Again, so that's why I'm looking at a short covering rally, if anything. Coming into resistance, though, guys. Right here, we have a little bit of a double top area that we are coming into some resistance. So, but we're in this channel here. Right, and this channel can be broken. I mentioned about that head and shoulders, and I have this line down here. Well, that didn't materialize, right? Because we never broke below our neckline, so that didn't happen. I took that away when we had that little symmetrical triangle. That didn't happen. It broke, but came back in again. So this is really clearly a double top with an upper channel formation. So just keep an eye. But look at that volume. I'm not really liking the way the volume is. So. Indeed, a nice little pullback would be healthy for the market itself. 15-minute chart of the SPY, bullish falling wedge here. Big breakout, a little bit of a back test and a breakout. And again, approaching these the upper end of this this area here. So to me, just use caution here with the what's happening with your longs. And if you're trading intraday, and obviously that's fine. You know where your stops are. TLT bonds. Really lost the 200-day moving average. Bullish for stocks, guys. Money coming out of bonds, going to be rolling right into stocks. There's nowhere to put your money. So if we can really see, well, you got a little bit of support right in this area here. If you look at the volume profiles, right up in this area here, and we're just really underneath the 200-day. So we'll see what happens today and tomorrow with the bonds. But look, as you can see, the bonds have plenty of room to move lower. Could really, really push lower here. But we'll just have to take it one day at a time. We'll see where we are with that. All right. Now we have our diamonds, which is the Dow Jones Industrial Average. Held that 50-day, as you can see, with the lower trend line. Up above the 20-day, and really didn't do much. We did break higher, but I'm going to call this an inside day versus this, obviously the spiders and the S&P cash. Really, really strong. And again, I really don't want to see them leading this market higher. I'd rather see risk correlated assets move higher before I see the Dow Jones and the S&P move higher. But yesterday, obviously because of IBM, put a big weight on the Dow. All right, next chart. Let's take a look at our banks again. Despite a lot, some of these banks who didn't report so well, big move up yesterday, break above the symmetrical triangle. To me, I'm staying away from the banks. I'm just not really looking to dive in here. I'd like to see another move lower and maybe some consolidation in here, and then I would look to try to pick up a bank that's a decent bank with some good numbers. But as of right now, as you can see, 3 days up. Volume was anemic yesterday, basically below average, and we're just sitting here on the 50 on the stochastic. So take a look at a 60-minute, and nice big symmetrical, and I said, could this be an A, B, C, D, and then maybe an E down here, or this could be an E, a D, and then an E break back below here. We have a 200 period moving average. If you're not using a 200 period moving average on your intraday charts for day traders, I highly recommend it. It's incredible. It acts as support and or resistance. If you could see here and look at here, put a 200 EMA on your charts and just really keep an eye on it, because it hit it to a science. And if you looked at a 3-minute SSO or spiders on a 200 EMA yesterday, you'll see when we had that little sell-off in the afternoon, it caught it and it bounced right off of that. So I never saw it the rest of the day. So just a little tip to keep an eye on that, something on that average. Okay, IWMs, big move up yesterday, decent rally, nice coming off that. We recapped that. We recaptured the 50 and we recaptured the 20. So really nice. I like to see this. This is something that I do like to see. Better volume than a previous day, and still below average. I like to see this really starting about 45, 48 million shares a day. Then I get a little bit more excited. But things are shaping up on a bullish side. We just like to get some sort of a consolidation and a pullback to really get more force and momentum to push this market much higher. Transports getting better, looking better. We're right now above that 200, just below the 200-day moving average. I had mentioned we had a lot of upper resistance at the 20 and the 50. We clearly consolidated and broke higher. Now we're at that 200. So keep an eye on the transports. That's going to be a big indicator. SMHs still lagging here, as you can see. Money really just really a dead cat bounce. Money really coming out of the tech sector, but slowing. Apple, not really what I want to see here. We're up. We're just under the 50 and the 20. Apple really couldn't take out the previous day's high, so we have an inside day with Apple. We'll see. Could that just be a pause for another move higher? It absolutely can. So let's keep an eye on Apple. I still say no trade here. I'm not looking for a trade unless you're doing an intraday trade. I'm not looking for a swing trade here in Apple. Either we're going to look to retest and buy this area here, or I'd be looking to short on a reversal candle anywhere up in this area, 660, 665. On a closing basis, I wouldn't want to be looking to short it on an intraday basis, because obviously the market can move higher. Last but not least, the Qs, big cap tech, as you can see, still really wishy-washy. We did get some volume here. I like the fact that we did get some volume coming in here. So improving. Technicals are improving. The bullish picture is improving. But there's still some red flags out there. I just like to see the market pull back and then see where we go, how this pullback occurs. Low volume, pullback, consolidation. That's going to be a market bullish bias to the upside. All right. Last couple days here of options expiration. Be safe out there, and we'll talk to you tomorrow. Take care, everybody.